Welcome back to another video. Soel here, and today we're going to talk about Money Flow Index, or MFI for short. Money Flow Index is a momentum oscillator that uses both of price and volume together for evaluating buying and selling pressure and possible changes in the direction of the price. By helping us in identifying overbought and oversold extremes and discovering possible reversals, MFI can tell us about possible changes in the money flow. If you're interested to learn how to use Money Flow Index, stay tuned and let's get started. Alright, here we go. We have Money Flow Index here below the chart. It's scaled from 0 to 100 and MFI fluctuates in this range, as you can see. The calculation of this indicator is similar to RSI, but the volume is also considered and some kinds of ratios based on volume is added to the formula. That's why some traders also call it volume weighted RSI. I don't intend to get into the calculations of MFI, and the focus in this video is on how to interpret and use this indicator. So if you're curious about the formula and how MFI is calculated, or you want to develop a trading algorithm based on this indicator and you need the formula behind this tool, just simply search in the Google and you'll find it in many websites. The default length for this indicator is 14, which is recommended by the creators of this indicator, and also 20 and 80 are the default levels for overbought and oversold territories. The default setting works pretty well, but you can adjust the setting based on your trading style and trading system or the market you're trading, so this indicator better matches with your whole analytical process. The interpretation of Money Flow Index is similar to RSI, but its behavior and movements are a little different because here the volume is also used in this indicator, and because of this the lead time of MFI can be higher than RSI because volume leads prices. 20 and 80 levels are used for identifying overbought and oversold extremes. MFI readings above 80 are considered overbought, and the ending of the current trend and declining of the price is expected. It can be in a form of reversal and turning of the price to downtrend like what happened here, or the current trend may stop and go to a trading range before either reversal or continuation of the prior trend. But please pay attention that overbought readings are not necessarily a signal for weakening of the current trend or reversal, and when the trend is strong the price may remain overbought, or you may see some consecutive overbought readings one after another without happening of any reversal or weakening of the overall trend, and the overbought readings may only foreshadows the corrections or pullbacks, and after that the price continues its direction. And similarly, when we have MFI readings below 20, it shows oversold extreme, and after that ending of the current trend and advancing of the price is expected. A reversal can happen and the price may turn to an uptrend like this case, or the current trend may end and the price go to a trading range before any proceeding in either direction. But just similar to overbought reading, here also the oversold reading is not necessarily a reversal signal, and when the trend is strong the price may remain oversold, or you may see some consecutive oversold readings one after another without happening of any reversal or weakening of the overall trend, and the oversold readings may only foreshadows the corrections or pullbacks, and after that the price continues its direction. Another signal that you can get from Money Flow Index is divergence. Divergence happens when the price and MFI move in the opposite direction. In bullish divergence, the price may form a lower low, but the MFI forms a higher low, and this shows improving of money flow and increased upside momentum. So we expect that the price is possibly going to advance. But please pay attention that when the trend is strong, a divergence may form, but the trend continues its direction, or even you may see some consecutive divergences before any happening of reversal or weakening of the overall trend. And in those cases, they just foreshadow corrections or pullbacks. And bearish divergence forms when the price makes higher high, but the MFI makes lower high, and this shows weakening of money flow and increased downside momentum. So we expect that the price possibly falls. But similar to bullish divergence, when the trend is strong, we can have a bearish divergence, but after that the price continues advancing, or even we may have some consecutive divergences before having any reversal or ending of the overall trend. And in those cases, they just foreshadow corrections or pullbacks. There is one strategy to filter these kinds of false signals in divergences or even overbought oversold readings, and that is using failure swings combined with divergences. Failure swing happens when the MFI passes the overbought or oversold levels, but after that in another try it can't, and this shows changing in the momentum. Bullish failure swing happens when the MFI goes below 20, then rises and goes above 20, tries to become oversold again, but it can't. And when it breaks the prior high created by MFI, it actually shows that the downside momentum is weakening and gives us a bullish signal. We can combine this signal with bullish divergence to have a stronger bullish signal. For example, here on this chart, besides having a bullish failure swing, also a bullish divergence formed on the chart. Together, they give us a stronger bullish signal. And bearish failure swing happens when the MFI goes above 80, then falls below 80. After that, it tries to become overbought again and pass the 80 level, but it can't. And when it breaks the prior low created by MFI, it indicates that the upside momentum is weakening, and this gives us a bearish signal. We can combine this signal with bearish divergence, like this case that we have here on this chart, to have a stronger bearish signal. And please pay attention that this combination of failure swing with divergence is not necessarily a reversal signal. For example, here on this chart where we have failure swing and bearish divergence, and after that the trend stopped and the price went to a trading range, as you can see. And like any other tools in technical analysis, you shouldn't take your trading decisions only based on this indicator, and you must use money flow index in conjunction with other tools and concepts of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.